What if your mutual fund only picks stocks that are already going up and exited before they fall? That's the idea behind Kotak Active Momentum Fund, a new NFO that chases short-term trends. But should you ride this wave? Let us find out through an in-depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this fund, let us first understand a few basic details about it. So, as this is an NFO, it opens on 29 July 2025 and closes on 12th August 2025. And some of the key features of this fund are: this is an open-ended fund type which belongs to the category of equity thematic and has Nifty 500 TRI as its benchmark index, and there is an exit load of 0.5% which will apply with if you choose to redeem it within 90 days of investment, and there is no entry load involved, and a minimum investment amount you need to start investing in this fund is 5,000 rupees. And the fund managers for this fund are Mr. Abhishek Bisan and Mr. Rohit Tandon, and according to the riskometer, there is a very high risk involved in this fund. Now, as we understand a few basic details about it, and these are some of the key features of this fund, let us understand the investment objective of this fund. So the primary objective of this fund is that seeks to generate long-term capital appreciation by investing in equity and equity-related instruments of companies reflecting momentum factors. So now let's move on to the analysis part of the video, where we are going to analyze the pros and cons of investing in this fund. So let us first start with the pros. Number one, momentum-based strategy. This fund focuses on stocks with upward price momentum. So the goal is to ride winners and exit before the trend reverses. Number two, actively managed advantage. Unlike passive index funds, the fund manager here can dynamically adjust the holdings based on changing market conditions. Number three, diversified exposure. The fund isn't restricted to a single market cap or sector. It can invest across large, mid, and small cap stocks across industries. And number four, bull market friendly. Momentum strategies tend to perform well in rising markets, helping capture strong short-term gains. And number five, tactical allocation option. So it might suit aggressive investors who want to add a satellite fund to boost their potential returns without disturbing their core portfolio. So these are some of the advantages of investing in an NFO like this. Now let us move on to the disadvantages. So the disadvantages are: first, high risk, high return strategy. Momentum works when trends are clear, but sharp reversals can lead to quick losses. Number two, volatile performance. Returns can swing widely. So this isn't a fund for investors looking for stability or predictability. And number three, trend dependent. If market moves sideways or stay choppy, the strategy may not perform well and can even drag down returns. Number four, higher expense ratio. Active funds generally charge more than passive ones, and that cost can eat into returns if the strategy doesn't deliver consistently. Number five, no track record yet. As an NFO, there is no historical data to evaluate how this fund or its manager will perform under different market cycles. So what is the final takeaway? Is investing in the Kotak Active Momentum Fund worth it or not? This fund offers a bold strategy, aiming to capture trends and actively manage risk and stay diversified. It may suit high-risk investors looking for tactical exposure and short-term return opportunities, but since this is a new fund with no track record, it's difficult to judge how well the strategy will actually be executed. That's why for most investors, it may be safer to wait and watch or explore existing momentum funds that has already proven themselves over time. So our recommendation is that if you are a first-time investor or even a conservative investor who's not willing to take a lot of risk, you should avoid investing in an NFO like this. There are other similar existing thematic funds with track record of at least 7 to 10 years where you can see how it has performed across all markets and be able to take a calculated risk instead of taking a blind risk where there is no proper portfolio or research in an NFO like this. So if you are looking for funds to add to your core portfolio also, you can avoid investing in this fund because this is an NFO NFO and we do not know how it will perform, and it will be like taking a blind risk, which if it performs not well, it can definitely impact the overall returns in your core portfolio as well. And also, if you do not know how to enter and exit from a thematic fund and when to enter and exit from a thematic fund, it's better if you stay not invested in this, because even as a seasoned investor, it's really hard to predict, so it's better to avoid. And also, as an investor, you can consult with a professional financial planner who can look into the suitability of this fund's investment objective, risk profile, overlap ratio, and allocation, and help you take better informed decisions. And if you're still unsure whether this fund or any other fund suits your goals or risk appetite, talk to a financial expert first. And we offer a free one-on-one consultation with one of our certified financial planners at holisticinvestment.in. The link is in the description, and if you found this video helpful, do like, share, and subscribe for more honest reviews like this.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.